Good morning. Welcome to another episode of the show, Wealth Clinic, where we talk about investment. Basically, more on stock market and how you can actually invest in a smart way without losing money. We are very concerned about that. And of course, if you're not losing money, we also want you to grow your portfolio. And that's what we are about on this show. We start off with the stock market, of course. We talk about the earnings reports from last week and this week. And also we talk about the gainers, top gainers though, 5 top gainers and 5 top losers as of yesterday. Then we will review the forecast for the sectors. We're talking about banking sector, insurance, industrial goods, consumer goods, and what you should look at for in this half year and how the performance was the first six months. How do you need to construct your portfolio, what stocks you need to buy, which sectors you need to focus on, and which you maybe need to avoid. Or in Abu's world, let's see how it goes. All of these after the break. Stay with us. Welcome back. It's still the Wealth Clinic show. And we're starting with the top 5 gainers and top 5 losers. We've got Resta leading the gainers chart. We've got WAPIC, we've got CNI leading, we've got PZ and Mutual Benefit, of course. I have me in the studio, my co-host Ambrose Omodion. Ambrose, how are you?
I'm very, very fine.
Ambrose is an investment analyst from Invest Data Limited. Anything stocks, sleeps it, eats it. He probably loves it more than his wife.
No, it's not possible. I only tell you that it's not possible.
So you don't want to go back to the house, of course, you say, I expect that. Okay, welcome on board, Ambrose.
Thank you for having me.
Resta leading the pack. Top 5 gainers for as of yesterday. Yeah, and it went as high as 9.76%. And looking at Resta, that's one stock that seems to appear on gainers chart a lot, right? What can you say about Resta, really?
Actually, the company is into service sector and they do transportation, But the good thing is that they've diversified, taking advantage of government focusing on agriculture. What they do is a new sector in the company that now they can transport any of your product from farm to anywhere in the world. And, that means that the company is focused on that. Investors are seeing that there's potential of this company to do better. And only that, when the company has concluded their right issue, and you see what they do the right issue, whether to do some of investment, and you see that, that means even though they've increased their share in issue, they are likely also to double their earnings to accommodate that expansion in their share in issue. What we are seeing in the result they released, because they released unaudited full year, just like about 3 weeks ago. And from the number we are seeing, it's possible that this company is like to pay dividend in the range of 35 to 40 kobo, if possible, from the number. On that alone, investors are taking advantage in and out. The good thing again is that when a stock is volatile, it is trendy. You can go in at a lower price, come up at a higher price. That is the mantra in investment: buy low and sell high. And this company has really demonstrated that movement. For that, investors are taking advantage. Now there's good ahead. When there's no information ahead, you can be afraid of taking position in any stock. But when you know that, either their free result is coming, the second quarter result is coming, something is going to trigger the price. If they announce good dividend, market will react to that point and corporate action. For that, people are going in and about. For me, in Invest Data, it's a buy range you have for that stock, and it's still within the buy range you have for the stock. That means if you are looking at Resta, you can be thinking of buying because of the dividend if you're an income investor. For traders, you can also take out. That's why you see a stock like this, people are looking at income investor are looking at it at the same time. Traders are looking at why traders are going to make 15% and run. Why the income investor as dividend is coming, I can enter this stock and take my dividend. You see, when you see this set of people looking at a particular stock, they're bound to be price movement in that stock. Knowing that now that the market is already pricing in the expected the second quarter result, that means the first half year result, we expect that this company are going to pay dividend will be attracting to invest, because we're expecting that because of the lockdown in the economy for almost 2 months, it's going to affect the Q2 numbers of many companies. And now the ones that are going to pay dividend will be the attraction, because most of the numbers that are coming in Q2, only the banking sector are major interim dividend paying stocks. Another sector that they're not going to pay anything, and the number will be bad. What you do, people will be selling off something to move for where there is goodie, along the line or in view. For that, that is why we are seeing movement in there.
So it closed at 3.26, coming from 2.97. For those that want to come in now, whatever investor, trader or income, investor, 3.26. Is this still a good?
No, it's still good in our own buy range. In our buying signal, we have a range for any stock. When it's above that range, we tell you to look away from. But since it's still within the buy range, I think it's good for traders to even enter the stock, because once we are coming closer to the release of the result, it's just because the NSE extended company release date for 2 months. Ideally, by any moment from now, would have seen the top. I know they will take that advantage because they give them like because of the COVID-19, they were giving grace to release the result about 1 month late. For that, we believe by for end of this month or early August, we should see the result of the audited one, because the one they released was unaudited. But they're giving insight what you should expect from the company. Yeah.
Okay, so we've got Wapik here. It's been a while I saw Wapik on this list. Gators? I seem to be used to seeing it on the other side. But then,
it has come to the grace that, for the insurance.
It's also low, like Treasury's Kobo. Maybe there's just a limit to which is talking go low.
No, for insurance company, they really perform well, insurance company, for the first half of the year. If you see, they are the kind of the leading sector for the why, because of the capitalization process or exercise in that sector is kind of bringing activities. Not only that,
but Wapik's result wasn't so fantastic.
No, I'm coming now. Not only that, because they are capitalizing, the amount that business will increase, because when you have more capital, more fund, you can do other business. Why do you do it? So that most business will not go out of Nigeria again. There are some foreign companies in Nigeria, they want to do insurance because they see that the capacity of insurance here are not too strong to absorb their risk. They go up. But now that the regulators are let's capitalize and be better to absorb it. It's telling on the insurance company. You can see that most of them this year, first half of the year, you can see them, they are almost on the gainers activities. One of them, the results also look better now. But we expect that as from second quarter, this COVID-19 will also hit insurance sector. Why? Their service is one of the first service that people will really put aside, because when you don't have enough fund, paying premium and paying premium, that the company is only thing I see. But for me, they have capacity now to absorb more risk.
Because that sector is the sector. Is that you're here or here? You're playing the big boys league, or you're not there.
Yeah.
Yeah. They seem not to have in between. But that's, by the way, for CNI Leasing also was on the list. PZ of note. It's been a while I saw it on any of top gainer or losers. But of course, there's a news in town that they want to sell up part of their business. Do we know which business they want to sell? Do we know why they're selling?
No, if you look at this PZ, I'll tell you, PZ is in a good sector, that their services or their product is what we need. But it's part of what you do to assess whether the economy is doing well or not. When you see that their top line, which is their revenue, is dwindling and profit is dwindling, it tells you that consumption it's not there again. People purchasing power has dropped. That means before, if you are buying cream from them before, now you can only manage one because you don't have enough. For that, their goods will remain on the shelf for a long time, which is also affecting the numbers. But for me, investors should not panic for a piece there. But the news we're hearing now is in two ways. On the short run, this news might move the price up, because when a company decides to sell either one of the product line or his premises, because they're selling part of their premises where the business line, they are selling is operating, or I don't know how they do. But if you are selling such, it means that one, in the short term, it will reflect positive on your book or your earnings. But in the long run, it is what you use that money to do at the end of the day that matters. Are you reinvesting to expand more? Are you looking at a new business you are putting the money?
Are they selling because you're broke?
These are the things we don't know. If you are selling because you are broke, we're not seeing part of the sales for now. But if you are selling to reposition your company, it's good for investors. That's why I think the ordinary AGM,
when is that?
I think it's on the 18th.
So you're going, right?
Okay, let's see how it goes.
You're not sure. So buy one unit so you qualify, then you be
I'm not sure that you are very correct. That is the good thing in PZ board. For me, for short term, this news will put the price for traders. But you know that this company also has suffered huge loss for almost 15 years low. And that gives you, for long-term investor, you can position in this kind of stock, because it's stock that have lost pricing for almost 15 years now low. There's a position that will go up.
I'm sorry to cut in there. When a company keeps losing for 15 years, something I feel is wrong, especially when you're in the consumer sector. It's not a sectorial issue. It looks like a company issue. So we need to be careful before we jump in, because why will you be sick For 15 years,
No.
and you're telling me that
Wait.
okay, what makes you feel that it's going to turn around?
No, when I mean 15 years low, it does not straight down 15 years low. I mean, it has touched either a number, a price, it went up.
Oh, you're talking of the price?
Yeah,
I
now
thought you meant their real life performance.
No,
like
no, no, I'm
their
talking about the price
earnings.
performance.
Oh,
No, 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 no. I'm not, since the price is 15 years low now, price performance. For me, it's an attractive thing to look at. It's very attractive at this point, especially for long-term investor. Then really that we're not going to remain in this circle of the economy. We are likely going to come out, let's say latest, let's say from first quarter of 2020, or we've started the sign from third quarter this we are at now towards the end. Once the economy starts rebounding, it is that settle to will show you that the economy is rebounding. Why? For now, you see that our purchasing manager index is below 50 points. It tells you that annually we are in contraction. But once we cross that means those manufacturing companies are started going, and that means they are going in for business and activities is coming up there. You see, this price will start going up. That's why for long-term investor, at this price, and with this news, for traders, they can do little things for trader, but for long-term investor, you can go there, buy at a good price. Or what you can do also, you can buy in stages. Take position, as you see, because it's better to average up than averaging down. But unless you have a company, a company that has potential, even when it comes down, you can go there, you can average down. But a company that like this, that what you do, you can average or buy in stages, buy first, then when it goes up, you buy more. You are buying, you are averaging up. That also gives them the opportunity to make money with the uptrend that we're expecting from the company.
Who are their competitors in the market on the exchange?
On the exchange, what I'll say is more Unilever, because the Unilever is also into personal use.
It's into the same of same.
Yeah.
Okay. Mutual benefit. Well, they're up. I'm not surprised. That's a good stuff.
Yeah. Mutual benefit, all the insurance company, as I said earlier, it's just because of their recapitalization exercise and also numbers looking good. But I'll tell you that their second quarter results and now the third quarter might not be too good because premium will not be there because of the economy. But for long-term investors, there are some of the insurance companies too that are selling at a giveaway price. What I think they are selling below their book value, you can buy for long-term investment because when we come out of this economic cycle, I see that things will improve.
I'm surprised you're recommending insurance for long term. Like seriously, no. For me, no.
No.
Maybe for traders, maybe you want to buy low and sell. But long term, no, please, no. But then that is.
Do you know that there are some insurance companies that during the tough time this economy was going, they were paying dividend consistently? And that kind of you bought at, for example, you bought in a stock for, I'll mention the name of keeping it, NEM and ICO. NEM and ICO. You bought at $1 and they paid you for almost 5 years. They are paying you 10 kobo dividend. You almost covered your return of $1 for many years. You're you are already in profit. You don't need to say you are losing anything.
You know what? I'll probably stick with Agric.
Agree. Okay.
Maybe. Okay, let's look at the gainers. We've got, losers, rather. Okomo on the losers chart. It's a long time I saw this stock. I can't remember even seeing it on the losers chart. Is this darling of the exchange? Just stock that we declared $2 and the price will move from like $10 to whatever. Like, people just like it. So, appearing on losers chart, is it because it's been up for a while? No. Or is something, the sector is enjoying a lot now.
The what we're seeing in Okomo is not that something is wrong with the company or the sector, it's just profit taking. Just profit taking. The stock got moved from, at the beginning of this year, you can see that the stock was around 58 to like almost 77. You see the price will come, now people will take profit. The sector is enjoying, some incentive from the government. Loan they are getting is below to the single digit interest. Not only that, that is a sector that, according to the MD, I listened to him very well. He said, when the government closed the border of this nation, he said that the order they have in the next 3 years, they will not finish. They have
more demand.
They have buyer already on ground. And not only that, you know why? Because all those oil that were passing through border are coming in. Those people cannot get such oil again. And Okomo oil is also one of the best oil again. And they all now make orders so that now they just sit down and be producing and be pushing it.
You're marketing Okomo oil. You don't used to talk about this stuff like this.
No. When I
come on board, join that conversation.
Oh, no problem.
Okay, Unilever. Okay, just like PZ.
Yeah, Unilever.
Not much there.
Yeah.
We've got MRS oil. Like it's sibling to one.
Yes.
Losing. Is that generic or is it?
No. The company also, their performance has not been impressive for Miss Oye, and now that their payouts also have been so poor. I think about 2 years they give bonus, no cash dividend, and investors almost die. They need cash dividend in this kind of environment where we are now.
Okay, Mansard. This is one of the big boys in the insurance sector.
Yeah, but monster dividend payout, if you compare the low, like you said, there are sectors, there are different categories of insurance companies. If you look at the smaller ones, the one will say, okay, they are the small cap in that group. Their dividend, if you compare their dividend to what Mansard is paying, is better in terms of feed. And that people are really, Mansard is like they are struggling. Their numbers are only flat this time. For me, if you are, because of the shareholding structure, that's why the price has been a bit stable. Because this AS International has about ASA, has holding for that structure is what is supporting the Master. In terms of number, they are oscillating. It will come positive first quarter, come down negative third quarter. On that, investor cannot plan with such stock.
Okay, custodian insurance also went down 9.09%. Okay, so we're seeing the big boys.
Yes. But the good thing is that for custodian, investor has to be very, when you have the analysis, you have to look at some stocks. This is a leader in that sector. Not only that, they are interim dividend paying company, just like Mansard. But Mansard interim dividend paying has been so like, I don't know what to call you. But this custodian insurance, they've diversified and they are, for me, it's just a market sentiment. There's great potential in that custodian allied for investors.
Interesting. Thank you, numbers. Of course, we're still on the show, Wealth Clinic, and we've just finished analyzing yesterday's gainers and losers. Top 5, though. There are a lot on that list. So we want to talk about the earnings that came in against yesterday. So livestock Q1 2020. Of course, livestock feed is in the agri sector.
It's a sector with Ukomo and Presco and others, yeah.
Yeah, that's a beautiful sector. I always like that sector. And of course, their revenue went up by 2.77%. I mean, Q1, they made like 2.47 billion. Okay, for the sake of explanation, Q1 is January, February, March.
Yeah.
First 3 months. Q2, April, May, June. So, like that. 3 months. Quarter 1, 2, 3, 4. So, January, February, March, they actually made 2.47 billion. Went up. And their profit after tax went to as high as, 40.5 million. It's interesting because if you compare their profit after tax,
previous
Q1 to Q1 2019, 2020, it went up like 325%.
Yeah.
While revenue went up just by 2.77%. Was there any extraordinary income?
That is a very good question you asked. You can see that their top line was just almost flat. And their, call it bottom line or profit after tax was, you tell you that the company has improved in managing their costs, knowing that now they have their cost of finance has dropped. Automatically, that is what we are seeing now. Knowing that they're enjoying, I told you earlier, government incentive left and right, we can see them back. And also, this is talk that investors should also look the way of this company. We are not seeing their second quarter, which any moment from this month, before end of August, should be in the market. But if you look at the sector operating, apart from the big boys, the Presco and the Ukomo in that top, this is the only one that is more lively in that company, in that sector. If you look at FT and Cocoa, they are not as active as this. And considering that they are into feed, and that feed, that the rate, poultry is opening up all over the country, and despite that there are other feed companies in different regions of the world. For me, especially in this southwest and all those stuff, I think livestock is one taking charge in terms of providing feed for them. And not only that, the shareholding structure of this company is also tight. I will tell investors that. Now we're seeing improvement in their performance. I said earlier, saying the cost of fund or finance or cost of operation is dropping. We're going to see more better number from that company. Also, if you look at what happened in Ukomo first quarter and you can see that also those they're enjoying because government is really giving attention to agriculture. They are the ones that are listed we are seeing. Others who are not listed, they are performing well, we are not seeing them, but these are the ones that are listed we are looking at because they are where we can make money. Other companies that they are making money because of this what the government is doing that sector. For me, this is a store that is selling at a low price. It's selling below his book value. His book value is around 1 naira 2 kobo, and it's selling around the 62 kobo, 65 kobo. Investors see there is a lot of upside potential in the stock in the short term. And not only that, they've not paid dividend for a long time because they have a negative board. With this improvement, their full year result was impressive. We're not seeing another first quarter result. For me, livestock is the place investors will be looking at, especially if you're a long-term investor.
Okay. CNI listened. The full year, gross earnings was up by 15.51%. Profits after tax went down 21.57%. what's going on there? That's for their full year results, 2019 audited. And Q1 is like the same thing. Gross earnings up, profit after tax down. What's happened?
If you look at this performance in this kind of company, we can't just say this is what has happened, what does happen in the company. I believe that the environment and the changing economic activities is also reflecting on their performance. But the what surprised me is that this is a company that before their share corporation, they paid about 0.075% kobo as dividend. Now they are paying 20 kobo from almost an earnings of about 2 naira, 32 kobo. For me, it's poor from our own side. The payment was poor. What we do, if I sell it for 4 naira, we are paying a dividend of 20 kobo. It doesn't hold water. But that's why, when the result came, it suffered, market had to treat the stock the way they suffered food losses for like almost 3 days. But since yesterday, I rebounded, slightly because that the close period for the qualification period for the dividend is closer, and expecting that yes, we might see a little improvement, not only in the second quarter, because already their first quarter is down. You don't expect that you see a better number in Q2 in the half year. We expect that subsequently at the end of this year we'll see a better number. But for those that are traders, they can also take advantage. But this 20 kobo is to just say investors, thank you for keeping on, but this will not move the price as expected. I was highly disappointed when I saw the 20 kobo. When you have about 2 naira, 32 kobo earning per share for a whole year, you are paying. If you are paying 50 kobo, it makes a lot of sense. That would be better. But what they are paying, for me, since they are holding back money to themselves, let's see what they're going to do with the money to do.
Okay, what I'm saying is, there's sometimes when a company grows their top line, revenue, at a percentage that is way lower than, the top line is, there's a 2% increase, and the profit after tax is like 20% increase. We say, oh, maybe they just got to know how to manage their costs well, like livestock. But could it also be that they are not managing their costs well? Because you can see that their gross earnings actually went up for Q1 and for 2019. For 2019, it went as high as 15.5% increase, 2019 to 2020. And Q1, quarter on quarter, 2019 to 2020, it also went up by 10.81%. But when you come down to profit after tax, Q1, full year results, their profit after tax went to as low, down now. It wasn't negative. But when you compare the previous year to now, to the year they're declaring, it went down as 21.57 lower. And Q1, 56 lower.
In this kind of company, they make provision for non-performing loan. Because they learn. It's the least activities they do. When the economy is bad, people might not pay you back for that. You make provision. I believe that food provision is what is affecting them. Because the activity is also almost related to what the banks are into. They are a leasing company.
Trust me, Ambrose. If any bank comes with these results, and you tell me that, we're making provision for that.
Definitely, even definitely, the banks are going to make provision. We expect the banks to do well as from 2021. This year, we expect the banks to just manage to survive and pay dividend. But actually, like what I told our followers on the video I did on Monday, that the banking stock, as to speak now, they are struggling. But those the first year banks that are used to paying interim dividend. If you look at what they pay as interim dividend, is small. And most of them are announcing their close period for directors to approve the second quarter, the half year result, which most of them are likely to pay dividend because it's little. But at the end of their full financial year, the possibility that they will cut dividend is high. But because of different banks have different policies on company. If they want to adopt their dividend equalization policy, they must have to pay the same thing they have, because most of them have good retained earnings, which is good. But for me, when you are making provision for bad loan, you need to also, that one you have your retained earning, you need to also guide it, because you don't know more how which the not performing.
The bank should not even come with that. By the time they collect 20 naira for transfer, they collect 10 naira for transfer.
No, that is the only hope we have, that e-commerce has helped the bank, even during the COVID, during the lockdown. At least was still going on. Yes, but see, that was not enough, because bank generate. We were taught why we were saying that bank generate money through what? Through lending. That is where bank make money, because when they lend, but when I lend, you are not paying me and want to make provision for what I've given to you, because it says CBN will not look the other way. It means that all the loans that you think that it will go bad, they say, not that it has not gone bad, you think that it will go bad, they make provision for it. So that when that loan starts getting better and they are paying you, it will be at your profit at the bottom line. It's good for the company, but they don't want you to put the depositors' money at risk. That's why I say, instead of taking that profit and go and share, keep it for, yes.
I didn't really shareholders.
Yes.
Shareholders. Oh. They will always suffer it, whatever it is. Anyhow you want to bounce the ball,
No,
it comes back
shareholder
to them.
is the last, at the last ladder.
And if we don't give this money, how do they want to? Okay, let's leave that. Corner Q1 results. Q1 2020 went up by 7.03%. Profit after tax came down 19.93. That's not shocking for a sector.
Yeah,
Right.
that's not shocking now.
That's not shocking because if you look at their Q4, that's full year 2019, they actually, the performance was okay. The revenue went up by 14.36%, and profit after tax went up also by 9.3%. So
Almost flat.
yeah,
Yeah.
but at least they're
And also they are paying dividend of the 2 naira. That's like what I said, they did dividend equalization. 2 naira they paid the previous year. Over like 3 years, they'll be paying 2 naira. This kind of company, for them to cut dividend at times will become a problem because they want to keep that. Even though we are not increasing, let's pay what we, that's what I mean by dividend equalization. Some problem that they must increase the dividend every year. No, I remember, if you remember in olden days when First Bank.
How can I remember olden days? How would
No,
I?
when I remember that, even though, fine, when the First Bank, Union Bank, we were competing with bonus. You are in the market. I remember you are
Which
still in the
year
market.
was that?
Like, it was like 10 years ago. Or
I wasn't in the market 10 years ago.
or even or 15 years ago. There.
I wasn't in the market.
You know, what I mean that they were doing the whole competition of bonus. Today they are suffering from because they really expanded
They
their
have
share.
a lot of shares in issue.
Then they were implementing this dividend collection policy that must pay dividend if they must give bonus. You can see that this National Bank, this new first year bank now, see the way they manage. Can you remember when they give you bonus? Like, fine, they decide to give you cash dividend because when they are giving bonus, they are putting stress on themselves because that expression of their numbers will kind of dilute their earnings at the end of the day. Who they're going to pay you peanut, but what they are doing, even some are even doing charge to do shared construction to make their earnings more. That is what Stanbic IBTC did. So as we speak now, their share in issue is about 10 billion. That means any small money they are posting 2 naira earnings, they are posting 5 naira earnings. They calculate because they have what smaller children. When you see a man that has 20 children and the one that has 2, they are different.
You can send down to UK to school.
Yes, no.
My friends go to this school behind them.
Yes, no.
All right, Japol. This actually came not last week, the week before, but the show didn't run last week, so we didn't get to talk about it. And Japol's turnover went up slightly, but interestingly, their profit after tax went from negative 555.7 million, 555.70 million loss, 2019 Q1, and now 2020. Full year. Full year
was positive, and also
positive.
why they are Q1, they moved from a negative position to a positive position.
So,
but for
was
me,
that a fantastic result or something happened in December?
Actually, as you can see now, for me, the performance of Japol in terms of number is okay, but it's a company that has accumulated loss of about 14 billion. Even though how number is good now or not, it doesn't make sense because you have already an accumulated loss, a negative retained earnings. That means for me, you don't have much to say. No, actually, yes, you are very correct. The thing investors have to do now, investors have to be very careful because the rumor in the market now that they want to do right issue. You can remember that for the last 6 years, we have not seen anything. Even we are not here, we have not seen numbers. So, for instance, we are seeing the company's number to know what is happening. And because they sold their assets for the last full year, 2019, it came and after they have sorted themselves out, the balance was reflected on the number or the result they released. That looked good. That was what triggered this performance we are seeing up and down in Japol. But now they now released another first quarter that is a bit positive. Not forget that they have a negative, the accumulated loss position. But the right issue they are coming on from, we have tried to value the stock to know what the value, because of the position. No metrics will give us any figure to say this is what a worth for now. For me, investors should be very careful when you are doing such investment. Now they are coming to tell you, because when I mean right issue, they're going to approach their shareholder, say, come on, we need this one. You have to, because the one you invested before now, what have you gotten dividend for it? Because the capital position is for those that are doing trading on the floor. that we are seeing. It's not for those that are shareholders. No, you have waited there for almost 7 years. Nothing has come. Now they are trying to come and bamboozle you with who are improving. You know what they're improving because we are moving from negative. See, you are having a negative. Fine. If you want to see, let's see your activities for the next your plan. That's why I love the banking sector. They'll give you their running plan for like 5 years. What they want to, you can watch and follow it and benchmark and say, oh, they are moving forward. For these companies, let's start seeing focus. Let's start seeing what you want to do. I think before now, I think that don't gave me what I think to say now. Before now in the market, we always see focus on companies. But I'll tell you, for the last 3 years, no company like that give focus to know what to expect. But they would do the focus on their own. But in the advanced market, each company will give you focus. For example, now as they are releasing their close period for reading, also give us what is your focus for the third quarter we are entering as a company, so that we'll benchmark that your focus with the actual that you release at the end of the day. Now there's no actual, there's no focus. We all do focus on our own because we're analysts. But the company that's operating, that will make work easier for us. If a company that is doing business, okay, this period we expect that we'll do this. Then when results come, you benchmark that what they get to you earlier with the actual figure. You can now know whether they are making progress or not.
And maybe that's why they're not doing it, so that you guys will not come and say, what's in your focus that you're going to do this?
Okay, is that why?
I didn't see anything. I just thought I was going to be in existence.
No problem. Here I am. No problem.
So don't judge me. Okay. Jais Bank, the only Islamic bank on the market. Listed on the exchange.
Yeah. What is the result?
Yeah, Q1 was good.
Yeah.
I mean, they went from 428.68 million to 553.92 million. Q1, right, like 29% plus, but thereabouts. Their results was good, though.
No.
Many people don't understand how Jais Bank actually works.
Okay.
I'm even trying to. I'm actually going there on Friday. I want to find out. They don't do interest.
Okay.
So they do profit.
Yes.
So I'm just wondering, do they invest in you, in your company, then you bring your books at the end of the day?
Yes.
And the profits
Okay.
Okay, so how are we sharing
the profit? You just say though. You know, the normal bank, commercial bank operation is quite a bit different from Jais operation. And I'll tell you that this COVID thing will not hit stock like bank like Jais much compared to what it will do to other commercial bank. One here, they are not giving interest to say, they are not giving to pay interest. They also oversee what is happening in your company. They manage, they help you to manage. At the end of the day, you share profit. That means before they give you, they've done their own due diligence. Wow, this business is profitable. But only that the environment will slow down the activity, but it's not really the way it's going to affect the commercial banks, it's going to affect this kind of bank. For me, that is why the result for Q1 is standing out, and 2 is likely to stand out because 1, they share profit. Then when they see that, and the business they invest, they should know what kind of business they invest. That, because of some ethical business, let me just put it that way. And this kind of, no, invest in some business that they know that it's not ethical. For that, this time, for me, investors also can look, but this stock is selling at a low price. It's one of the penny stock or Kobo stock. It's around 60 Kobo in the
banking sector.
Yeah, one of the cheapest ones. And their mode of operation is different. If you understand the mode and you won't, I think it's a bank to look at.
Even if you look at the sectorial performance on the banking sector, January to June, half year.
Yeah.
They went down. They lost like 10% plus. While the likes, the commercial, most performing sector, performing stock, and
that's price.
35%. We've got assets 34%. Lost. I mean, if you look at the cost, the prices was January 1st, and the prices closed June. That's what we're talking about now. Looking at the stocks in the banking sector, comparing them to Jais Bank.
Yeah.
Jais Bank actually lost 10% plus.
Others were having more than...
The commercial bank assets 34%. So if you had XYZ amounts in January 1st by June 30th, if you had Sterling Bank, you will have lost at 5.5%.
Yes.
If you owed your position, no selling, no nothing. So I think it's performing, we have to look at...
Yeah, the thing is, particularly those long-term investors and those also, because of the rules in the market again, this kind of stock will be volatile. Because with 60,000 naira, you can move 100,000 units and the price can go up and down.
And that makes it a good stock for trading.
That's what for trading. That's why traders can also look, because the new rules also help a lot of these penny stock or low price stocks to move. That's why in the video I did about around the March, when we were into this COVID thing, that No, the six stock that you should look at. No, we call it a defensive stock that will be recovering. No, stock that benefit from this pandemic, the low price stock, and stock that has good dividend yield, despite the situation. Now the prices are low. There are companies that when they pay dividend at the end of the year, you will see dividend that will be more than inflation. And for that, this kind of stock, if you know this category of stock, you know where to be. And this penny stock, I said in that video that what will make them more volatile is that the prices are low, little money can go in and can move the price up and down. And that volatility is what every trader wants to take and partake in.
Yeah, what every trader wants, and maybe not what every long-term investor
Yes,
wants.
yes.
All right, thank you, Ambrose. We're going to short break, and when we return, we talk about the forecast for sectors on the exchange. We're talking of banking, consumer goods, insurance, industrial goods, and a little review about how their performance was first quarter of the year. I mean, first half of the year, January to June. After the break, stay with us. Okay, so. Welcome back, welcome back. It's still the Wealth Clinic show, and on this segment, we will talk about the sector, the performance January to June, and then the focus July to December. And here we've got consumer goods. I still have Ambrose in the studio, of course. Consumer goods, January to June was down 24.12%. Actually, that is the worst performance sector.
The consumer goods.
Yeah,
you should know that. You should know that. You don't need to ask.
I was expecting maybe insurance to you.
No.
No, that was the worst performing sector, January to June, losing 24.12%, followed by banking sector. That's volatile. That's not surprising, 20.46%, and then oil and gas. That is what you really expect to be topping insurance before insurance tops. I mean, because oil and gas 16.68%. Is it that this statistic is, sometimes when you're doing averaging, the numbers may impact, the value may impact, or is this real? Like, in terms of performance, banking is worse than oil and gas in the sector?
This performance in terms of what our index movement, for you to assess or to measure performance, there'll be an index to guide you. This index is for each sector to know how they are performed, and it comes around both their earnings, market perception, sentiment, all for that period.
How on earth will oil and gas be better than banking? I mean, that's a stock that virtually everybody wants to have. It's volatile, you make money, the perception is good. There are many there in the sector, and they lost rather 20.46% as a sector that year. Who drew them down? And you Sterling Bank lost about 35-point-something%.
Yeah, not only that, when, perception and sentiment is key when you are investing. When the COVID-19 hit the nation economy, we know that it has been happening around the globe, but when it hits us here, the first sector that gets the shock is that banking sector, because one, we know that the economy will be affected, and bank is one of the, I call them movers and shakers of the economy. Because if the banks have lent money and people know that there will be bad loan, automatically investors will do what we call safe haven. They want to leave banking stock for another, and they are selling down, prices will go down. But also remember that during the last recovery, it is for the second quarter. We're doing for the 6 months, but for the last 3 months, which was April to June, banking sector is one of the that led. Why? Because the prices were low, they rebounded. Because it has gone low to the level that you can see Zenith Bank around 10 naira, 70 kobo, GTB touching around 16 naira. They all go back GTB to almost 23, 24. Why Zenith Bank to almost 18 naira? That is the volatility in that sector. But in terms of performance for the whole, considering what was open at the beginning of the year, knowing that at the beginning of the year, market was up too. Now closing down for June, they are bound to be this kind of volatility.
Okay. Ambrose, let's do a little bit of math there. So this index, generic index, and any other index, if you're looking at banking sector and you want to actually grade each of the stocks within that index,
Yes.
and you want to say, okay, how was the performance? Getting it is a question of picking the price January 1st
Yes.
and picking the price at which it's
Just
closed.
like that is for the sector, for the individual stock. For the sector, you look at what it opened the year and what it closed the year. That's
So-
what you use.
Whatever happened within,
No, what about the down? No, it is,
Okay.
it is when we are looking at the 52 weeks or low, if you look at what happened with the board. Now we are looking at what is the performance between end of December 31st and end of June 30th.
why I'm saying that is this. If you look at the banking sector, I don't think we have the data on banking sector. If you look at individual performance, you see
for stocks.
for stocks that I'm talking of January 1st to June,
Yeah.
picking the price at which the stock opened and the price the stock closed. I'm going to relate to the index
Okay.
later.
Okay.
You see that Sterling Bank was the worst performing.
Yes, one.
Leave that aside. Unity Bank, that we know that in real life
Okay.
is worst performing than
Yes.
Sterling Bank,
Yeah.
is actually third. I mean, Access is even worse performing
Yes.
before Unity Bank.
Yes.
Just because we're using the kind of statistics we're picking,
Yeah.
it makes it look like, if you are going to look at this now, you think Unity Bank really did better than Access Bank.
Yes. Yes.
Just because we are picking the opening price and the closing price. But we know that that is not true. Because in real life, and when I say real life, we're talking about the real result that they bring, Unity Bank should actually be topping this.
But actually,
Why I'm saying this is this. I don't want us to confuse people.
Okay.
Because when people look at this at a glance, they just feel, okay, so I'm going to stay away from this. I'm going to stay away. We need to let people know that what is actually used in getting this performance when you talk of sector is actually the price, I mean, the value that
Of the
started
index.
January 1st and actually ended it. So it doesn't mean, it's not like Nimet, for instance. I don't know how much it started with or closed with, but I'm sure if we have to look at it, it might actually be one of the worst performing. But we know that is not true because
But
if a stock started
what
at
are
50
top-
naira, 50 kobo, sorry, Scotty, 50 kobo January 1st and ends 50 kobo June, you say that stock didn't do anything else for a year. But that same stock could have gone up to 2 naira, came down to 50 kobo, gone up to 3 naira, came down to, all within a year. But at the end of the day, what price did you stop at? 50 kobo. So write it down, 50 kobo. We didn't do anything.
But that's why, as an investor, too, you don't just buy stock and go to bed to sleep.
No, you just, don't take information.
No,
Just like
what
this.
I'm coming, let me, I know why.
Yeah.
You don't just buy stock and go to bed to sleep. Like what we just said, what we are doing is historical. Because we're thinking of what happened in December 1st, the 31st to do. We're already in the, we're just historical we're doing. But we wonder, how are this stock perform? If you really want to look at what we call post-analysis of this stock, you look at what is the, the 52-week high and the 52-week low. If the price is closing today, we say as the worst performing sector, that is closing at a support level, it's an advantage for you to buy. That is why, as an investor or a trader, you do your own analysis. You ask questions so that you educate yourself more. But what we are giving you is just historical data, what happened for this period. Also, why is it good that you should have it? It gives you an insight where I should look at. Because I tell you that you use this momentum of losses or gainer to know the next place there's opportunity. When you see that a company is gaining too much, you know that, oh, it is almost getting at what we call overbought region in technical analysis. But when a company is almost at, is also getting lower to almost oversold region, it means that people are really selling those. That means opportunity for you to enter. All these are just to guide you so that you know what to do. For me, this historical analysis is to guide investor where they should look at. It's not, it's a final one. So because of the stock move at from 2 naira to 5 naira, it made that stock the best in the industry on the market. There are some one that has value. They even have done more than that, but because that period they have sold down, taking profit, it comes low. For me, for this just to guide, that's why I call it.
So this is just to guide. This is just to
No,
guide.
this is just to give you
More information. You can
go
go to NSE Exchange. I mean NSE website.
Yes. If you want to get the-
www.nsc.com.ng or
Yes.
speak to your broker
Yes.
or your investment analyst like Ambrose. Okay, so that's sorted. So it's consoling. If oil and gas is 16.68 and banking actually lost 20.46.
No, all those sectors are hit by the COVID thing.
Everybody is it. Why not?
Why you advertising with the banks?
I don't know. I just feel it's unfair for banking to be listed.
But if you look at that,
oil and gas.
if you look at the market for that first half of the year, sector like insurance top, followed by
Yes,
followed by
2%.
industrial goods. You just like, wow, that is market for you.
Okay, so let's look at focus. What should we expect? First question, underwater agri sector, because they don't seem to have a particular index of their own.
No, we can put them in manufacturing sector too. Just like as you speak now, we don't have index for the telecoms.
There's no index for pharmaceutical too?
Yeah, for telecom, you know that they are the sector that is driving the board. No, sir, but if you go to your, the premium index, you go to premium, you can see MTN there, and that part of MTN premium, index also performed. I show that premium set performed because that is the reason that moved. Or that's for that period, that half year was struggling, but because MTN gave for that period, it showed on the premium sector. But actually, like what you just said, before we look at the outlook for the rest of the year, we look at what happened in the market in the last 6 months. Yes, the market lost 8.8% for that first half, and we know the factors that were responsible for those, that there are many. The market on its own was not expecting, even all the analysts, both locally, especially in Nigeria here, nobody factored in COVID-19 into our projection, because we're saying that being the first time the federal government is passing their budget, first time in history, in the year before we enter 2020, we're saying that the spending of the government should give activities to the economy. And then oil price was still selling around there. Benchmark was around 57 for oil. That is true. And at the same time too, we're seeing that there's a lot of potential that in the economy for that. Seeing that government has started also before now encouraging the agriculture sector. We're going to see a lot of activities in terms of what our infrastructure, because anywhere in the world, infrastructure will drive development and growth. But along the line, at the beginning of the year, the market started good. January was good for everybody in the market. It was sweet. But CBN is the one that just came with a policy that does turn investors apathy for the stock market. At the month of February, when they had their first MPC meeting, they increased the cash reserve ratio. That sent kind of shock to the market. People were not saying that the market was going down when the came in around February 27 or 24. When that happened, the market was straight down to almost 11 years low. That was serious.
Courtesy of banking sector.
All of them were hit. But you can see, when there's one thing in the market that I tell you that it's not compulsory that because market is going up, economy must go up, or economy is down, market must be down. No, it's not compulsory. But economy supports capital market, and capital market being a leading indicator, that's what is happening in the economy. You can see during that second half of the year, the economy was still having a negative realities. Events were what? The capital markets were looking up. There was a great disconnection between the market and the economy. You ask yourself why. There was positive sentiment and what liquidity was in the market. That liquidity was because the foreign investors that sold down when the thing hit us, they were unable to exit the market because of the exchange window, the CBN and all, and there was lockdown. Nobody was working from home. All the documentation were not there for them to exit. Instead of that, they are not seeing all the stocks at low price. So they use their money back, and that pushed the market up. But I'm telling you, now there is gradual opening for them to recover their money back to exit. They will likely be going out of the nation, or the nation capital market. But the good thing is that generally in the world, there is low interest rate regime. That means the only place you can even make more money now is the equity market. That means for us to speak now, if not that the second quarter, the second half of the year we're entering, second quarter result is likely to be disappointing because of the lockdown. That's what they're going to affect the second half of the year that we're going to look at now. It's going to affect it. Oil price is still struggling, oscillating, but it's good that it's still above $35 per barrel, which is good. For now, before during the COVID issue, when we were really at the heat, it was as low as almost getting to $15 per barrel. But now it touched as high as 41 before coming down to oscillate between 38 and 41 now. It's a good sign. But if the fear of COVID-19 resurgence in this second half of the year is controlled, if that increase, because the more they are opening up different nations, different economy, you can see that the cases of new cases is on the rise. Not only in Nigeria, but the good thing is that the rate of death in matured economy has reduced compared because it's like there's less seeing how to manage it. The rate of death, but here people are still dying, and the number of cases, that means it will affect economic recovery globally and even Nigeria. On that note, it might likely slow down the economy down. But I'm telling you, with the injection of funds by CBN, despite there's no quick feast. There is no quick feast at this point, but we see that with the injection of 2.3 trillion for the federal government, we expect to look something better going forward. But the only fear I have that this inconsistent policy that is coming from the state government again, you are injecting almost 2 trillion, 2.2 trillion into the economy. At the same time, you are the one bringing factor that was to trigger put more pressure on inflation. For example, now the fuel price has been reversed. No, that also put pressure. We know before now, because the closure of border, inflation has been on the uptrend. Now the COVID-19 now came and worsened things. Now again, we are now increasing your plan to clear your electricity tariff. You know that they suspended it. They wanted to start implementing this July. It was like they push it now to next year. Now we have increased your fuel pump. These are factors that will put pressure on inflation, and the cost of transportation was also there. And also companies that have imported goods have not gone back, or even individuals have gone back to refill. The fuel they have in the store, the prices are continuing to be hiking every day because they are not bringing you up. Because everybody is being careful. They've not started traveling out to make order. Even though they are doing order online, they are not getting more because of COVID-19. On that note, I see that that is only going to slow down. But for me, as from the last quarter of this year to usher into 2021, we'll see recovery, real recovery.
Okay, thank you very much, Ambrose. This is how far we can go this morning. Thank you so much for watching us. Ambrose, let's have your number for those that want to reach you after the show.
Yeah, 080-281-64085.
Okay.
Yep.
My number 080-6448-9694. 080-6448-9694. If you have questions regarding stock market investment, business strategy, you can reach out to either of us. We'll be glad to answer your questions. Thanks for watching once again. This show returns same time next week, 9 a.m. Enjoy the rest of your day and remain safe. Goodbye.